Hey, everybody. Glad to be here today. My name is Brent Moores. Merry Christmas. It's Christmas Eve. And this is our last webcast of the day. And we'll be out for the rest of the week as well. So after this, glad to wrap it up here. And then we'll be back in full force on Monday with the full slate. But glad those of you who are joining me today. So it's managing an options portfolio. We'll go through various individual positions in a portfolio. I also want to talk about scanning, finding potential candidates for your options portfolio today too. I'm joined alongside Mr. Kevin Horner in the chat. Appreciate Kevin. He's there to help me out, get any questions that I can't get. But you can follow us on X at Brent Moore CS, at Kevin Horner CS for additional content throughout the week. And yeah, let's go through the disclosures and then we'll get to the main subject at hand. Options do carry a high level of risk and are not suitable for all investors. And multiple leg option strategies will involve multiple transaction costs. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. And rolling strategies can entail additional transaction costs. The paper money software application is provided for educational purposes only. The paper money virtual trading application does not assign short options early, which is different from a real trading account. And for the sake of simplicity, I may not factor in commissions into these trades that we do, these sample trades, and that's all these are samples. They're example trades. They're not recommendations by any means. Past performance is no guarantee of future results. All investing involves risk, including loss of principal. There you go. Okay, let's head on over to the Thinkorswim desktop platform. This is the S&P 500. Had a strong year. This is an all-time high today on the S&P 500. How's that? Going into Christmas. All-time high in the S&P 500 and a yearly low on the VIX. This isn't actually the VIX. This is implied volatility on the SPX, but it's, trust me, the VIX is at the yearly low too. So yeah, people have some Christmas cheer, I guess, in their system. Now, I want to talk about managing portfolios, but I also want to talk about finding stocks for your options portfolio. Because people often ask that question, how do you find stocks? Well, let me tell you something I don't do, and then I'm going to kind of do it, but show you a modification on this. One thing I don't typically do is just run a scan, okay? So if I run a scan, I can do that. I can go up here and pick up a scan query, either a pre-established one. Look, public scans. I can look for stocks that are at new yearly highs, or various things. Okay, or I have saved scans, and we'll talk about some of those. And the scans I show you today, I will share with you. I'm not going to spend the time building the scan today together, and the only reason is I just don't have enough time to get through all that I want to go through and build the scan with you. But I'll share with you the scans I have, and then feel free to tweak them. But what I don't like to do is I don't like to just run a scan. Let's say I run this scan here and it comes up, and then kind of pull up the stocks that way. Because once you run the scan and save the scan, what you can always do is just pull up in the watch lists the saved scans. Each of these with the little purple symbol next to those are just scans that I've saved in the past. And I can pull that up. Bullish, no earnings. I don't even remember what went in that scan, but here's what comes up with that. So instead of running the scan, what I'll do is I'll look at a watch list. And then what I could do, is I can add columns if I want to. I can sort by, for example, implied volatility or something like this. I did a session the other day in my Condors, Calendars, and Butterflies webcast. This would have been probably the 29th, if I'm getting my dates right, 28th, 29th on Friday, where I talked about using IV percentiles there. And if you want that in more depth, what I can do is what I can do is I can put a link in to that session in the chat if you're watching on the chat. And if you're not, just go to the YouTube channel, the Trader Talk Schwab channel, and go to the playlist for condors, calendars, and butterflies. And you can look at the one for, I think it was December 19th. We did that webcast where I talked about using implied volatility percentiles. Now, having said that, the kinds of scans that you may do to create is so that you can create this watch list when you save it, it depends on the strategy you want to do. Do you want to find bullish stocks, bearish stocks, neutral stocks? Well, there you go. So for example, what I can do is I can go to my personal watch list and I have a saved scan there, one that I've just titled neutral stocks. Okay. And then when I do that, it pulls it up. Now it's more than just neutral stocks. Okay. If I go here and let me just pull that watch list up here, load scan query, and we're going to go to neutral stocks. And as I mentioned before, I'm not going to go through all the parameters of the scan. But that's what they are. Basically, we're looking for stocks that are within a moving average envelope. Here is kind of how this goes. But it's not just that. I'm also looking at S&P 100 stocks, okay? S&P 100 stocks. So, and penny increment options to make sure they're more liquid. Because if I open it up to all stocks, I'm going to get a lot of stocks that probably aren't appropriate for options trading. Why? Because options trading requires more liquidity, all right? So what I can do is I can modify this scan if I want. Let me share this scan with you, first of all. I'm going to share the scan query. And this is just going to be neutral stocks. And you may like it, you may not. You may want to use it, maybe you don't. That's fine. Let me share that. Let me click on this. I'll throw it in the chat if you're interested. That's the neutral stock scan. And what I'll do is I'll put it in the scratch pad here. Neutral stocks. And there's the neutral stock scan. And if you're copying in, all you need is the exclamation point A7RS4VTC. It is case sensitive though. Okay. So once you have that scan and you've saved the scan, it becomes an available watch list for you. I'm hoping that's clear. Now, I want to just double check questions here real quick and then move forward. It looks like Kevin's busy answering questions, so I appreciate you, Kevin. I think Kevin's got you covered there on that, so I appreciate that. Okay, so there's a scan. Now, but there's a little more nuance than that I want to talk about. We're not just looking for bullish or bearish or neutral. This was neutral, but maybe I want something that's more high volatility or low volatility. Well, there's a couple ways I can do it. I can just add the column here if I want, or I can modify the scan if I want and just save the scan that way. And so I can add another parameter. I can go to add filter. I can go to study filters, and study filters, by the way, are not available on Paper Money. You got to use them on your live platform. But if I go to study filters, I can go to volatility and I can go to IV percentile. Okay. So here's IV percentile. And let's say we want a low IV percentile. So I'm going to put between 0 and we'll say, I don't know, 20 here. Now, when I rerun this scan, I've shrunk it down. Let me get rid of this. Now, when I rerun this scan, it's thinking, we'll give it a sec here. Come on. Does not want to cooperate. Maybe it doesn't like the 0. Maybe it wants 1. I don't know. Let me click on scan again and see if that does it. There we go. It popped up. So I have my IV percentile is low on all these. What kind of strategies would these be appropriate for? What kind of strategies are neutral stocks? Okay. So what kind of strategies would be appropriate for, say, a neutral stock with a low IV? Okay. Well, something where maybe something that's Vega positive, where it benefits if implied volatilities go up. You know, something that pops into my mind with that would be like a calendar spread, okay, or a diagonal spread. So that's an example of something like that. Now, what I can do is I can alter this scan and save it separately. I can do this one and save it as neutral stocks with low implied volatility. And if I wanted to, I could just modify the scan and resave it if I wanted to as something with a high volatility. Now, right now, I'll tell you, there's not many stocks that have a high volatility. So instead of putting like above 80 or something, maybe I'll put above 25, okay? So 25, and then I can run that scan. And then what I'm going to have is I'll have neutral stocks. Come on, there's got to be something with that. Okay, well, on that list, it looks like there's nothing there. But implied volatilities are just kind of low across the board right now. Let me go back to the original scan there. What I put between 1 and, I can't remember, 20, I think. Let me just run that scan. And here we go. So what we can do is I can then look at these stocks and you can say, oh, here, Pfizer, Coke, or I can go to neutral stocks over here and do that. Okay, so let me go to charts and I can go and look at some of these. And I can go through and say, hey, you know, here's our implied volatility at the bottom of the chart. Low implied volatility, where do I think the implied volatility is going to go? If I think it's going to continue to go down, then I wouldn't want to do a positive Vega trade. But if I think implied volatility has kind of gone low and it's more likely to go up over time, especially as earnings season gets closer, then maybe I would do that. And is this neutral? Look, the scan's not perfect. You'll find stocks that you go, I'm not really that neutral on it, okay? This is just one of my attempts at a neutral scan. You can use it if you like. You can use your own, but the principle is this. Take your scan, save it, or take your scan, add implied volatility as a parameter, and save it. And then you can just pull it up as a watch list there. And then you can do a trade if you want. If I'm going to do this, I'm going to look for a positive Vega trade. I'm going to go and let's do a calendar spread. How about, okay? I'll go right at 70. That's kind of right at the money. I'm going to go here and I'm going to sell my 70. Okay? And that's 23 days out. Let's go out a little bit farther in time. We'll go out 50 days. I'm going to go to the 70. And I'm going to buy that one, hold down my control key. I now have a calendar spread. Okay. I can analyze this trade if I want to look at it. And I can go to risk profile. And let me just kind of move this in here. And there's my calendar spread. Vega positive trade. If I go to price slices, look at the current price slice. There's my positive Vega trade. My theta is positive. Time decay's helping me out on that. I can do that trade. What's my max risk on a calendar spread? The debit. So about $100 on this. Let me unlink that. About $100 on that trade. So if I want to add that in, I can ramp it up. Let me get rid of this left-hand column. I can say, well, I'm willing to do 2 contracts or something like that. Then I can confirm and send, and I can throw this in the calendar category as more of a neutralist trade. If you're not neutral, you want to do the trade, right? This is just an example trade. We can do a similar type thing with trending stocks. So let me give you trending stocks. Again, we do the same thing and save it as a scan, save the scan, and then it'll be a watch list. Clicked on the wrong column. Load scan query, and let me do an uptrending scan, and I'll share that with you as well if you're interested. Here's uptrending within 5% of a 20-day moving average, S&P 100 stocks. I do that S&P 100 to try and give us more option type candidates, more liquid type stocks. Let me scan that. Here's my uptrending stocks. There's not a lot of them, but there we go. Again, if I wanted to, I could throw in the implied volatility parameter, no earnings in the next 20 bars here, next 20 trading days. That's where we're at. And then we could add, if we wanted to, just to show you how, we can go to add filter, go to study filter, and change ADX crossover to volatility, IV percentile. Okay? So, and then we can run that IV percentile in. And if I want something with a low percentile, I can do, we'll say 1 to 20 again. that's not going to change the results, I don't think. Yeah, we still have those same two results. If I were to go high percentile, just remember, in the current market environment, the vast majority of stocks, here's your S&P 100. The vast majority of stocks, let me just pull up S&P 100 here, have low implied volatilities. Here's my IV percentile on these. Look at these. How many do you see that are above 50? There's a couple, there's a few maybe, not many though. Out of the 100 stocks in the S&P 500, there's maybe 5 max, I think, that are above 50 right now. So just keep that in mind. So if that's a scan that you want to use, that you want to save, you can do so. I'm going to share that scan with you. We'll call that uptrending, share here. I'll put it right here again. Control V. If you're watching the chat, you can just do the exclamation point 5IAVDET9. It is case sensitive. And once you have that, if you want to add that scan in, you can go up to the gear up here, go to open shared item, paste it right in there. Then you click on preview. It'll give you a chance to name it whatever you want, and then you can import that, okay? So why would I look for uptrending stocks? Well, I'd look for uptrending stocks. Let's do that. The scan, the one I shared with you, I titled uptrending within 5% of the 20-day moving average. Why within 5% of the 20-day moving average? Because, let me just pull this up. Here's my 20-day. That's actually not one of those stocks on here. Let me go BMY. Because here's my 20-day. If it goes too far extended, then sometimes you worry it's a little bit overbought. Here's Booking.com. Nice little uptrend. There we go. And there we go. So that is uptrending within 5% of the moving average. Okay? All right. Oh, yes, I'll put that in the chat. I meant to put that in the chat. I did not do that. Thank you. It's in the chat now. All right. So here we go. And then what I can do is, well, what kind of strategy would be something that looks for an uptrending stock with a low IV? Well, maybe a long call. That's supposed to be a low IV. A long call would be an example of one there. Ideally, you're buying it for cheaper if the IV is low. But again, you only do it if you think that IV is going to continue to go up. Okay, so let's do this. let me go and I want to do one more variation. I'm not going to do a sample trade on this right now. What I'm going to do though is I'm going to do one more variation just so you have it in case you're interested in it. And that is, let's look at downtrending stocks, okay? Again, I'll share it with you. I have a downtrending stock scan. Where am I at? Downtrending stock scan. I'm going to go. Let me just run it real quick, see what we got. It's thinking. And it going slow. Should have a bunch. Let me just do this. There we go. So there's a bunch of downtrending stocks. Let me share that scan query with you if you're interested. What just happened? Cancel. Did I do that right? Click on the right thing. Share scan query. There we go. Down trending. Share. Copying it. I'm pasting it in the chat. And for those of you watching on a recording, I'm pasting it right here. Exclamation point D8 IM5 UKJ. Okay. When would I do downtrending stocks with low implied volatility? Maybe long puts would be more appropriate for that. You guys can decide on that. Let me just show you some examples of those downtrending stocks, and possibly will emphasize the point that, no scan is perfect. I didn't mean to do that. Why is that? Just want to look here. There we go, downtrending. CVX, downtrending. NEE, downtrending. Nike, downtrending. Intel, debatable maybe. The scan's not perfect, but in general, I think it gives you some pretty decent downtrending stocks there. Save the scan, then you can just pull it up in the watch list. At the risk of repetition, I don't run scans each day. I don't run scans generally when I buy stocks. When I look for examples for this webcast or other webcasts, I don't run scans typically. I use my watch list. Okay? So, there you go. If you have any questions, let me know. Kevin's been active. Thank you, Kevin, for helping me out on that. Biosa says, never loved long calls. Fair enough. A lot of people don't like long calls, but this approach works for different strategies. If you're looking for a neutral stock that has a low IV, that'd be probably more appropriate for calendar spreads or diagonal spreads. If you're looking for a neutral stock with a higher IV that you still think is going to be neutral, maybe you're looking for iron condors or butterfly spreads, okay? Because those are Vega negative trades. If you're looking for a trending stock with a low IV, maybe long calls, long puts. Trending stock with high IVs, maybe short put verticals, short puts, short call verticals would all fit the bill on that probably. Okay, let's move forward. Let's talk about some management here before I run out of time. Okay, we're going to go to our portfolio and we'll just kind of start at the top today. Short verticals, and I may not hit all these stocks, but we'll go through and get as many. I want to give you examples of ones. Apple, what do I have? I have a short put vertical on Apple. I sold the higher strike put. I bought the lower strike put. Right now, we're almost break even. We're up just a smidge on this. And so do we stick with it? Well, we've got 23 days to go. So there's no urgency to get out. At this point, clearly I haven't made most of what I can make. We've made $8 on it. I'm not in a terrible situation. I've made $8 on it. So really in this case, and this is true for most of these trades, I think you just need to ask yourself, am I still bullish on this? Okay. Are we still bullish on Apple? Let's pull up Apple. Bullish enough, I'd say. I mean, one other factor maybe to think about is this. Am I making money day to day based on time decay? Theta positive. Yeah, this is a theta positive trade. We're making money if it does nothing. So we're gonna just kind of punt on that one. We're just gonna let that sit here for a little bit. Let's go to BMY, okay? Here's one where we're doing fairly well on. We've made $87 on, that's fine, okay? But I want you to point something out to you on this trade. This is a short put vertical. Look at the current price of the options. Okay? You can also kind of see this right here, percentage, percentage. How much more? This is the option, the spread right now is about 0.05 right now, okay? How much more can I make on this trade at this point? At best, I can make $5 more on this trade. Like if these go to zero, if they expire worthless, I'm making $5 more on this trade. So I can hold on for 23 days, take up the buying power on this, or I can reallocate that capital to something different. And that may make sense if I can only make 5 more cents on this. So for that reason, I'm just going to close this one out, okay? And Rocco says, it looks to be at resistance here. Anyway, regardless, I'm getting out of this guy right now, okay? So what I'm going to do is I'm just going to click on it, create a closing order. I'm going to buy this one back. Now, I'm going to buy it back for a little bit more than $5, okay? Maybe it'll be $7 or $8. We'll see. Well, I sent it. We'll let that, see if that fills or not, okay? Let's move forward. Let's look at another one. And again, I'm trying to just use examples of these, example trades, illustrating different things. Pfizer, how are we doing? We're doing okay on it. We've made basically all we can make on it. And there's only 2 days to go till expiration, okay? I can try and get out. I may not get filled. It's going to expire in 2 days anyway. This is a short call vertical. 26 is the call on this, on Pfizer. Here's Pfizer. Well, basically what the market is saying is there's very little chance of this going above 26 in the next couple days, okay? Well, tomorrow the market's closed. Market closes in about a half hour of today. So really it would be 1 day's worth of trading. There's no earnings or anything on this, so likely it's going to expire or worthless. I can put in an order to try and get out. It's probably not going to fill though right now because there's just not going to be that much liquidity on these. The prices are basically zero on that right now. So normally we'd get out of that at this point, okay? I'm hoping that's making sense to you. So that's short verticals. I'm not going to show the others because I think those are the ones that illustrate what we need here. Let's look at long single options, okay? Now, so far, all these trades have been winning trades. I have plenty of losing trades here as well. We'll get to those in a little bit, but we're just kind of going in order right now. Caterpillar, this is a Leaps contract that it started to show some weakness last week on this. Here's Caterpillar. Last week, we were looking at this right here and we're going, well, I'm still bullish here, okay? I'm still bullish here, but we tightened the stop just in case things went south on us, okay? So we tightened the stop last week. So we have a tighter stop now. Since then, we had a nice little bounce. That's exactly what we wanted, okay? So we're going to stick with this. We got 387 days to go on this. We've talked about that trade a lot in the past. I don't want to beat a dead horse here. Question, this was Sia said, What if I use, on that one, I said, I don't think we could probably get filled on this. On Pfizer, I think is what we were looking at. Could we get out if we just used a market order? We probably could, but I don't want to, I'm willing to wait the next couple days with the risk of this going against me rather than get filled at a lousy price on a market order on it right now. There are times when I'll do a market order on an option. Right now, given these circumstances that we have 2 days till expiration, it's a spread trade. I'm willing to wait those 2 days on that. Okay? So, good question. Thank you for that, Sia, because I'm sure other people had that question too. Warner Brothers Discovery. This was a nice one. This is a long call. It's done well. We still have 23 days to go. Are we still bullish on it? That's kind of the question we asked on Apple earlier. Are we still bullish on it? That's probably going to be the determining factor of whether we stay in this or not. Well, we dropped and it had a nice bounce. So I'm going to consider this to still be bullish right now. Now we've got a stop on it of some sort, 425 stop. And that seems reasonable right now. The stock, the option is right now at 680. Could we move that up? We could move that up a little bit if we wanted to. To do so, I can just right click on it, cancel and replace that order. Instead of 425, we'll move it up to 470. How about? We're tightening the stop up a little bit on that just to help protect us. But overall, we're going to say we're still bullish on that. So we're going to let that sit. Okay. All right. Let's go to long verticals. This is one I think we're losing on. Yeah, we're down a little bit on this one. Union Pacific. We have enough time till expiration on this. It's a long call vertical. In other words, we bought the lower strike call. We sold the higher strike call. 235, 240. We're right about that 235 mark right now. We're down $60. Are we still bullish on it? Okay. Let's look at UNH here. I don't know. Here's the thing. Right now, if we look at this, what's our time decay showing us? Negative. We're losing everything else being equal, okay? No, not assuming a move up or move down or anything. Everything else being equal, on average, we're going to be losing money each day on this trade, okay? I think we close it out. What you could do alternatively is you could put a stop in, tighten a stop up on this if you wanted to. That's another alternative. But in this case, it's not looking that bullish to me. It's looking more neutral than anything right now. So, thank you. Wrong chart. UNP. I saw the UN. Okay. Well, this actually does look a little bit more bullish. Potential resistance up here. You could probably make a case today. We have a nice little bounce to stick with that a little longer. Thank you for helping me out, everybody. I had a little mess up there on that. I was showing the wrong chart. So bottom line is if we're bullish, you can stick with it. Maybe we add a stop in. If we're bearish, or neutral, probably just get out of this thing, okay? If I want to add a stop, where am I going to add a stop? Well, currently the price is this. Look, I've got a long calls at 475. I've got short calls at 235. Basically, they're at 240 right now is the spread. You see how I did that? I just subtracted the price. It's at 240 right now. If I want to put a stop on this, I can just highlight these. I can right click on this, create a closing order to sell the vertical. And this is the current price, 240. Well, I'm going to make it a stop. Now, stops don't guarantee we're going to get out at this price, but I'm going to say, well, maybe I want to kind of hopefully try and help protect myself. I'm going to put it a little bit over half price. Half price would be 120. I'm going to put about 160. We'll put that stop in. We'll give it a little more time here on this. Good till canceled, confirm and send, Okay? There we go. Let's keep moving forward. Okay, we did Union Pacific. Let me close that out. Let's go on to the next ones. Let's see, how are we doing on time? We're doing fine on time. Okay. Calendars. Let's go to calendars. Calendars, diagonals, butterflies. So we've got a mix here. This is, what kind of trade is this, everybody? What kind of trade is this? I've got different expirations, January 2nd, February 20th. I have different strikes. It's a diagonal spread. Okay. That is a diagonal spread. I only have 9 days to go on my short contract. Probably time to roll that if we want to stick with that. And we're doing fairly well. I'm willing to stay with that. And so maybe what we do is we look to roll this one out and hopefully get a credit. Now, right now, we have a January 2nd and a 38 call. If we were to roll this out, now I don't want to roll it all out to 58 days because that's when my long contract is. But I can go out a month maybe on this, or maybe a little less. Let's go to CMG. Here's the current position I have. We'll go to the monthly contracts. We'll go out 23 days. I'm going to look to roll this. I'm going to look at my delta just for a sense of where to go. And I'm going to roll this out to 30, 35 delta. We'll go to 36 delta here. So I'm going to sell that's kind of a weird strike, isn't it? 39.2. I'm just going to go. Why would you, look at that. Let's do a little quick tangent. Look at these strikes, everybody. Is that a little bit weird? What that typically means is there was some corporate action. When companies have options, they don't do strikes at 38.2, 38.4, and so on. No, there was some sort of split or corporate action or something that adjusted these strikes. So that's why we see that. I'm just going to go with the 39 strike, okay? So I'm going to go with the 39 strike. I'm rolling it up a little bit, okay? I'm rolling the strike up a little bit. Right now, let me just go here. We've got the 38 strike. So this is put, right now we have the 38 strike. Now we could roll straight to the 38 strike if we wanted to keep that same strike, but we're kind of right there on this. So I'd rather move this out of the money a little bit more on this because I really don't want this one to go in the money. If this goes in the money, the delta gets higher. It means we're going to be making less money if this continues to be bullish on my long call. So I'm going to roll this contract. I'm going to right click on it, create a rolling order. We're going to go from January 2nd and we're going to make this to January 16th. And we said we were going to do this as a 39 strike. Now, we're not getting much of a credit here, okay? We're not getting much of a credit here, but we're also moving it out of the money further. So we're giving us a little bit more leeway on that. So I think that's probably worth it in this case. Now, if we were to roll to that 38 strike, we'd be getting more of a credit, 57 bucks. But in this case, for the reasons I just stated, I'm going to keep it at the 39 just for the overall sake of the trade. I'm going to confirm and send. So I'm going to move that just off the mid price just to see if we can get more likely to get a fill, confirm and send that order, okay? So we just rolled that out. if we want to look at this trade, we can look at this. All in all, it's a bullish trade. Here's CMG, nice trend, fits there, okay? And Sia says, after commissions, you don't have much of credit. You're absolutely right. The main reason we're rolling it isn't for that credit. If I wanted to roll it for that credit, I could stick with the 38 strike. I'm rolling it up, getting that strike a little bit higher there, okay? So that's CMG. Let's move on. Let's do another one. Nike. This is one we rolled just last week, but Nike made a big move. This is one we've been talking about for months now. We just keep rolling it out, keep getting the credit on the short. The long keeps getting worse and worse, but we keep bringing in that credit. So what I'm going to do is I'm just going to roll this out barely at all, but I'm going to try and get that credit there. So I'm going to roll that 72.50 call. Let's look here. This is a January 16th. Okay. And we're going to Nike. This is the current situation. And we'll roll it out a little bit here. I'm going to go somewhere out here. What's our current? We currently have that 72.50 call, short call. I'm going to roll this down because Nike is down at 60. So I'm going to go down to about 30 delta. Let's go to that 63. So I'm going to go here. I'm going to roll this. I'm going to roll to about 30 to 35-ish delta. I'm going to right click on it, create a rolling order. Now, and let me just do this before I forget. 63. That's going to bring about an $81 credit for us. Okay. And we're going to confirm and send. We just move this over just a little bit, confirm and send that. So we rolled that. Okay. Let me just see if there's any other trades. One other note here. When we roll, it's not saving you commissions, folks. It's just, you're just doing it on one order ticket. So there's still commissions and fees on that. And one other trade I would just mention maybe is this Netflix trade. What's this trade? This is a back ratio spread. Okay. This is a back ratio spread. We're under 9. It's gone fairly well. We made good money on this, but all good things must come to an end. We're going to take our profits on this because we only have 9 days to go till expiration on that. When you have these trades, sometimes they're easier to get filled if you do them, sell them instead of the whole back ratio spread or instead of the whole iron condor or whatever, selling it as individual legs here. First, I'm going to cancel my existing exit orders. I'm going to right click on this. I'm going to create a closing order. We're going to confirm and send and get out of that one. We're going to do that on this one as well. We're going to create a closing order. And we're going to confirm and send, get out of that one too. We are out of that, booked a nice little profit on that. That was good, okay? So there we go. There we go. Sia said, back ratio spread's new to me. Hey, I talk about them. I did a session on them maybe 2-3 weeks ago in the condors, calendars, and butterflies webcast I teach on Fridays. All right, everybody. Hey, that's it. What did we do today? We talked about finding these trades, how you do it, how you can vary it. Remember, start with the scan, but once you save that scan, you don't need to run a scan each time. You can use your watch list to find the trades that are of interest to you. And then we talked about managing a whole bunch of different positions. I want to thank Kevin for helping me out in the chat. You kept him busy today. I appreciate you, Kevin. I want to wish everybody a Merry Christmas and Happy Holidays and New Year. This is it for the week in terms of webcasts. However, start Monday morning, check out Trader Talks. Kevin will be hosting Trader Talks Monday morning. Make sure you follow Kevin on X as well, at Kevin Horner CS, at Brent Moores CS. Everybody, thank you. Have a great day and holiday season, and we'll see you all in a few days. Bye-bye, everybody.